Good morning, and welcome to the Energy Perspectives Group webinar hosted by LithiumBank Resources. This event is being recorded. During the presentation, all participants will be muted. If you have any questions you would like to ask, please type them into the chat feature. We will read and answer questions at the end of the presentation. Thank you so much for joining us today. Now here's Dan Steffens, who will introduce today's speaker.
Okay, I just noticed we got a lot of people just signing up now, so I'll wait a minute or so. Welcome to all you guys that are already on here. It's a good topic today. I'm very excited about this company that's hosting today. So anyway, I'll go ahead. Welcome to today's webinar. It's being hosted by LithiumBank Resources. It's a recent addition to my watch list. It is a public company based in Calgary that has acquired claims covering lithium hotspots in oil fields in Alberta and Saskatchewan. LithiumBank has a process called direct lithium extraction, DLE. You'll see several companies talk about their DLE process that can be used to recover lithium from oil field brine water. By using the existing wells and infrastructure within these large, well-defined oil fields, they can significantly reduce the upfront capital costs of a lithium recovery process and scale up to produce lithium at commercial quantities at high profit margins. I'm bullish on lithium because the rechargeable battery market is growing so fast that lithium producers that we have today are soon going to have a lot of difficulty keeping up for demand. I just looked at the lithium market, and lithium is selling for $42,000 US per ton as of this morning on the futures market. Okay, so before I turn it over to today's speaker, it's Kevin Peepgrass. He is the Chief Operating Officer of Lithium Resources. But I want to remind everybody that batteries, rechargeable batteries, are not a source of energy. They are actually a source of energy demand. They have to be recharged, and that energy has to come from something. So even if half of this world's vehicles become EVs running on large battery packs, we are still going to need primary energy sources to produce the energy to recharge them. For many more years, the majority of primary energy will come from fossil fuels. The United States and Canada need to work together on a common sense energy policy that includes all forms of energy. So Kevin Peepgrass is the Chief Operating Officer of LithiumBank Resources. He's a professional geologist with 15 years of experience managing the exploration and development of commodities, including gold, silver, copper, lithium, and rare earth elements. He is a qualified person pursuant to National Instrument 43-101 standards for disclosure for mineral properties. He's been working for LithiumBank since 2019. So during the webinar, if you have any questions, please type them into the chat box and we'll answer them at the end of the presentation. To get to the chat box, just lower your cursor arrow there to the bottom of the screen, and then you can click on chat and you can just type your questions in there. And at the end of it, I will read them and we'll discuss that. So he's going to have about a 20 or 30 minute presentation. So at this point, I will turn it over to Kevin for an update on LithiumBank. So go ahead, Kevin, all yours.
Great, thanks, Dan. Appreciate that introduction. So LithiumBank, we are focused on brine-hosted lithium deposits in North America, and more specifically, the Western Canadian Sedimentary Basin. So like Dan said, we set out in 2019, and we had a mandate as a private company who pulled some money together from some high net worth, successful oil and gas and mining individuals. We set out with a mandate to focus on brine-hosted minerals in the basin. We did that because we knew there was a false start in the lithium prices early on, a few years back in 2017, and they kind of cratered in 2019. So a lot of companies were dropping and a lot of interest was lost in the space. We knew this was temporary. So we amassed about 4 million acres of land in Alberta and Saskatchewan. And we did this with our technical team, looking at the geology, looking at the seismic, looking at a lot of parameters to find some of the best ground we could. And we were able to stake all this ground. We've since conducted a lot of exploration in the area. We've sampled a lot of the wells. So I should say these are all all the information that we get from the basin is from oil and gas, the oil and gas industry. We're able to sample oil and gas wells and get the formation water and test for lithium in all these spaces. So we narrowed down our search, and we'll drop a bunch of ground as we go, as they expire. And that's the nature of exploration. But we focused on 3 districts: the Boardwalk, Park Place, and our Saskatchewan district. These are our flagship projects that we're going to move forward with and focus on developing. Our Boardwalk asset, it's about 270 kilometers west of Edmonton, and it's called Boardwalk. We renamed it Boardwalk because we think it's the best project in the area, in the basin. And I'm going to show you why. Because there's a bunch of parameters that you need to have a profitable project in this brine space. You need to have scale and size. So we acquired the entire Leduc reef structure. It's a confined aquifer. It's a Devonian age Leduc reef. And it hosts 6.2 million tons of LCE, lithium carbonate equivalent, at an average grade of about 70 milligrams per liter. So it's one of the top 10 sized resources of lithium in the world. So we were actually one of the first Canadian companies, or the first Canadian company, to add indicated resources to this deposit. And that's because in that indicated resource zone, there's over 440 oil and gas wells that penetrate into the Leduc. So we were able to gather that information, have a lot of confidence in that information. The next is land tenure. To have a good asset, you need to have simple, uncomplicated, solid land tenure. There's no competition here. We have 100% of the crown. Everything here is crown minerals. We have 100% of the crown mineral rights to the minerals, which includes the lithium. The overlying, so of course, this is an oil and gas field. So there are overlying petroleum, natural gas licenses and leases. What keeps that simple is that it's held by one individual company. CNRL hosts all those mineral rights. So dealing with one asset, one company, and they've shut the whole reservoir in. They are not producing anything. So there's no competition with worrying about pressure, worrying about having to commingle anything. So it's really simple in that regard. The next is the deliverability. The reservoir needs to be able to produce a sizable amount of water. It has to have the right permeability and porosity to get the water to surface. And that's key, because if it doesn't, you're not going to get the water that you need to produce a sizable amount of lithium. So we've shown with our hydrogeology that we can produce 250,000 cubes of brine a day from that production zone over 20 years. And so that's only 10% of the entire Leduc reef by volume within our claim area. And that you can see that presents opportunities to scale up in the future and add additional wells and add additional modules as you go further north. So that's something to look at in the future. That's not contemplated in our current study. And the next, of course, in the mineral space, metallurgy and being able to separate your mineral of choice from the host rock or the host media. So the metallurgy is getting the lithium out of the brine. And so we've demonstrated 93% recovery using an ion exchange system. This is not our proprietary ion exchange system. We as a company decided to focus on resources. We know that there has been an incredible amount of capital and effort and time going into developing these DLE assets or these DLE technologies from multiple different companies across the world, really. So to sort of get through this hurdle and demonstrate that we could recover this, we engaged with Hatch Engineering. Hatch is a global engineering firm. They build everything from bridges to towers to mines. They're big on mining. And they have a world-leading hydrometallurgical team. So we use their expertise. They do feasibility studies in spodumene assets, in solar brines and geothermal brines. And so we've used them for petro brines. And they're able to, through their connections and knowledge, look at all the DLE technologies out there and really weed out the ones that wouldn't work and focus on the ones that are going to work for our brine and conduct test work on them. So we've done that with over a dozen. We continue to do that with additional DLE technologies as we go. We want to make sure that at the point of pulling the trigger on this, that we have the best technology. So we had very good success rates on our recoverability. And of course, we've released our preliminary economic assessment just last week, and we're going to look at that. So our PEA has demonstrated that this Boardwalk project can produce the largest amount of lithium hydroxide monohydrate, LHM, in North America. It's 31,350 tons of battery grade LHM over 20 years. It gives us an NPV of $2.7 billion and IRR of 21.6 at a pre-tax basis, and an annual EBITDA of $586 million. So this thing produces a lot of cash. And I'll say we chose LHM. We could have done carbonate. This thing could produce carbonate or LHM. We chose LHM because it's a higher density product, and we feel North America will want to have that range, and they have that range anxiety in EVs. So we chose to go with a higher density product that gives batteries a farther range. But we are open to both sides in an iteration. So I want to touch on Paul Matisik. I don't know if anyone knows Paul Matisik in the audience. He's a geologist by trade, a geochemist by trade, but he's been a very successful leader in the resource sector. In his career, he's got the title of selling 6 resource companies to majors. 2 of those being, Lithium One and Lithium X. Those are lithium companies, brine companies that he sold for over $500 million each, or together. Sorry. He's also sold Potash One. Potash was is a solution mining company. Project that sold for $434 million, and it had very similar metrics as you see Boardwalk have, sub $50 million market cap, a $2 billion NPV, a 20% IRR. So, he's able to identify these projects that are, say, undervalued, but have a massive upside, and clear, uncomplicated, simple paths towards development, and really a good political environment. So he's come on as our chief executive chairman. He's also the largest shareholder in our company. So the Boardwalk economic summary is here. I'm not going to read all these numbers here. You guys can have a look, or look at a bit later. We've used a LHM price of $26,000 per ton. You look at the market today for that. The current price, the spot price, I guess you could call it, is $42,000 per ton right now. $26,000 is acceptable for an economic study. The previous PEA and feasibility study that just came out recently by another company uses $26,000. It's a more conservative number, and it's acceptable for the long term, even though we see the demand staying very high for a very long time. You can see there's a lot of upside to that number. One thing that jumps out at people, of course, is the CapEx. The CapEx, $2.1 billion CapEx on this. This CapEx is derived from Hatch and from other consulting companies that added their expertise into this CapEx number and the engineering designs. These are numbers taken through COVID, through supply constraints and labor constraints, and we know that with the current inflation environment, these prices are not really coming down. We know that these higher prices are here to stay. So this is a real world number. Hatch is also extra conservative, being, having real world experience building projects. So they use that into their parameters. So we consider, and we still pay this back in 4.5 years, which is pretty phenomenal. But we consider this a very strong baseline study for the project, a very good start to enhancing this. And what we've seen is that this is not the be all end all. We're not stopped here. We're not done here. We have things that we've been working on in the background that just haven't been finished yet. And we have several ways we're going to enhance this significantly. We think we can bring that IRR up significantly. We can reduce the CapEx by a significant amount. And I'm going to show you these right here. The first is an obvious one, is we don't have anything to do with it, but it's going to happen nonetheless. It's the Canadian government announced a 30% incentive tax credit. So this tax credit goes towards the production and processing of critical minerals, including lithium from brines. It's a refundable tax credit, so it's been passed through Parliament. It's been approved in the 2023 budget. We're just waiting on legislation to give us the fine details to put a real number around it. But we expect, somewhere in the magnitude of, say, a 10% reduction in CapEx from this. The next is the DLE technology we use that we showed you, the 93% recovery. That company, Conductive, has now come out with the next generation. This wasn't available to us during the testing phase. And we've initiated testing with it now just so we can compare it. But their test work shows 20% enhanced loading capacity, which means they need less media to recover the same amount of lithium, which means the next step, you have smaller equipment sizing, which reduces CapEx and OpEx, which we look forward to getting those results. The other is actually alternative DLE technologies that we've been ongoing and testing for since the beginning. And we're far along with a couple of these. And one shows a huge promise in reducing the OpEx by about $3,000 per ton. And they do that by using different reagents in the media, because our OpEx currently is about 54% reagents. So by using different reagents, we can knock off about $3,000 on the OpEx, which is a huge savings. The other, of course, is equipment technology. As you know, there's never been a need to pump up this much brine before. So the pumps that we're using, the electrical submersible pumps, are sized for a certain wellbore for this kind of project. So there are prototypes, and we expect quotes for these prototypes that will fit into smaller wellbores. These smaller wellbores, of course, are what is typically used in Alberta for the oil and gas industry, and they would cost over $500,000 more to drill these bigger wellbores, right? So our well network currently has 100 wells, and the project uses all brand new wells for this assessment. We didn't want to rely on other things for this particular assessment. Like I said, it's a baseline, and we wanted to show that this is a self-sufficient project. So by reducing, excuse me, these ESPs, we could save over $500,000 per well times 100. So there's significant savings. And of course, the repurposing of old wells. We have a team working on that, going well by well, looking at which ones would be suitable for use in our brine project. It takes a bit of time, and you have to be sure that you can actually add these in an economic model, that they are suitable. But that work is ongoing, and when we have that list complete, we can redevelop our well network and accommodate these, and of course save the money in not drilling new wells. And the other is geological. So our reef structure, we've averaged out the porosity and permeability across the whole reef. Of course, that's not the case in reality. We know that the production zone, where all the oil is and where all the oil companies are drilled, we know from their production records that the permeability and the porosity is higher than what is given us in the average, because the average includes the tighter part in the west. So we intend to drill a couple holes for a couple reasons. Drilling a couple holes would give us geological data through the whole reef formation to the bottom of the Leduc, because typically the oil and gas companies won't drill to the full length of the Leduc just because the oil is at the top. It floats, of course. So when we drill to the bottom, we'll get geochemistry data that would give us more confidence in our resource to a measured and indicated category, but as well as the permeability porosity data that shows a higher perm, higher pros, which would, of course, give us the ability to have less wells required. You could pump more per well, and you could inject more per well. And the other one is quite interesting. It's we signed an MOU with a company called ZS2 Technologies, and they have a couple proprietary technologies. The first side of their business is they have a direct air capture for CO2 emissions. And so our project, again, being self-sufficient, we've designed our own gas turbine power plant to be within the fence. And we did that for a couple of reasons. We did that because we want to be able to control our power. The Alberta grid is not necessarily the cleanest, but it's also fluctuates in price as power demands go high and during summer peak hours and summer and winter. We wanted to be able to control our price, so we have our own power plant, and the other is control our emissions. Canada is implementing $170 per ton CO2 emissions on companies. So with this high efficiency power plant, which uses steam to co-generate electricity and uses steam to also offset electricity in the processing design, stays under the efficiency rating and it's exempt from carbon taxes. So that's a huge savings in itself. It also, this technology applied to it also provides carbon credits. We can sell carbon credits from that. And the other half of their business is they have a magnesium-based cement company, and they have the ability to extract the magnesium and calcium from our brine. So we would be giving them 10% of our spent brine, the brine that's already gone through the DLE and has no more lithium in it. They would take 10% of that and they would remove the magnesium, calcium, and be responsible for that brine. And then they would sequester their CO2 inside magnesium and calcium carbonate and build their concrete materials. So we offset a lot of the disposal fees. So we're going to go through these. We've been working with all of these, and we're going to announce these as we go. Each one of these adds incremental value, and you'll see news on these as we go. Park Place, also one of the best projects on the board in the area. We've taken 3 years to consolidate this project. It's a much larger asset. It's about 5 times the brine hosted in the rocks through our hydrogeological study that we've completed. It shares a simple land tenure. It's all crown minerals in there. We're not competing with other companies, so that's one of the criteria we've always used to select projects. If you look though, we've taken one sample we reported earlier in the year at 77.2 milligrams per liter. Historically, the samples run between 76 and 130 milligrams per liter. So historically quite higher grade. So we're looking forward to this summer completing a sampling program where we can confirm some of these grades and put a resource on it. But the thing with Park Place, LithiumBank, we started out in 2019, and it took us some time to develop these the test work with DLEs and develop relationships with consultings and all these things, and all these learnings we've had with Boardwalk, we'll be able to implement with Park Place. So we expect that we'll be able to put a resource on this and put a PEA on this and have a similar comparison with an economic evaluation with Boardwalk, and these will be on par by the end of the year. Our other assets are in Saskatchewan. Our Saskatchewan district is actually 3 projects. And in Saskatchewan, of note, we're actually the largest holder of crown minerals from auction in Saskatchewan. So we have a very strong portfolio. And there's a lot of activity in Saskatchewan. For example, Prairie Lithium was recently purchased by Arizona Lithium, an Australian company, for $70 million. And that's just adjacent to our project. If you look at Kindersley is working on a PEA actually, and their claims are, fingered into our checkerboard pattern. They're black to our white kind of thing. And so we have a very similar project, and they have a $24 million market cap. In Estevan, a similar story there. The neighboring company just drilled a very high grade lithium sample. 259 milligrams per liter lithium, and that's 4 sections over, so 4 miles over from Estevan, and they have about a $45 million market cap. So why am I mentioning all these other companies? It's because if you look at our market cap, we're not getting credit for any of these Saskatchewan assets in our portfolio. Our market cap is certainly focused on Boardwalk and Park Place, and so for our shareholder value, we're looking at the options of spinning these projects out, of monetizing these in some way where the company and the shareholders will see the upside from these projects, and it'd be non-dilutive. So the new co Saskatchewan would fund it, would bring a management team, and our management team can focus on our Alberta assets and not lose on the upside, because we do see there's a massive upside on these projects, just perhaps not in the LithiumBank vehicle. So I would look forward to seeing news on this in the near future. So this is a very simple commercial cartoon of what an operation would look at, and everything is basically things that come from other industries like oil and gas. So number one, obviously you won't actually see pump jacks because we'll be using ESPs, so you'll even have a smaller imprint than the pump jacks, but it would come up and it'd go through a pre-treat like a triple phase separator, all these oil and gas standard equipments that would be coming up. And the important thing here is you have your pumps and you have your pre-treat, which is pretty standard stuff. There's no open pit. There's no big evaporation pond. So from an environmental standpoint, the surface footprint of this project is significantly smaller than anything else you can produce lithium with. And of course, direct lithium extraction is where all the magic happens. And this is one thing that we get questioned about. Of course, it's the one thing that is not commercially proven, so it's where the risk is. But like I said, there's been hundreds of $millions going into DLE process to process these petrol brines by these technology companies. And if you've heard of a company, Standard Lithium, they're working in Arkansas in the Smackover formation. They've announced commercial production by the end of 2023. So this DLE, it's really a risk until it's not, until someone goes out and does it. And Standard's been doing great work, and so great that Exxon just purchased the neighboring land for $100 million US. So they're dipping their feet into the DLE and lithium petrobrine space as well. So I feel that risk is decreasing every day. And then the back end of it goes through fairly standard equipment as well, reverse osmosis and some concentrators that are not necessarily that complicated, and things that are used in other industries as well. So our comparables, there's not a lot of comparables in the petrobrine space that have completed PEAs. So I just mentioned Standard. They've reached a $900 million market cap due to what they've done in their de-risking and their progress they've made throughout their company. E3 Lithium, they're also a comparable in Alberta. They also have Leduc assets similar to ours. They've gone and they've done their PEA. They've increased their resource and they're building a pilot plant. And I should say now that we're expecting a pilot plant to be in our Calgary warehouse by the end of the summer. So if you look at the value creation curve, this is how we see de-risking of assets and getting through these stepping stones and these headlines to add value to their companies. And everyone's trying to get up that curve, of course, towards production. And so we feel that Boardwalk and Park Place, we can close these gaps very quickly, quicker than all these. I mean, E3 put out their PEA in 2020, and they're just piloting. We put out ours yesterday, and we expect to pilot by the end of this year. And because we're going to do an indoor pilot, the pilot is probably bigger than most companies would put in the field, but we're going to do it indoor so we can pilot both Boardwalk and Park Place and our other assets in Saskatchewan if we need to, and really catch up these projects and narrow the gap on this value creation curve. And you can see from our cap table, we have a very tight share structure. 35% of our shareholders are insiders or friends and family of insiders. And so we're highly leveraged to good news. And as we add value through our steps that we can take, we should expect to continue to add value to shareholders. So I've discussed Paul. Rob Shuchuk, our CEO, stockbroker for many years, has a lot of successes in the capital markets, raising money. You can have a great project, but if you don't have a team, a corporate team to keep the company in a good financial footing, you can lose your projects. So we've amassed a team, a board of directors and a management team that knows how to execute on projects, that knows how to keep projects financed, that knows how to keep the capital structure tight, and also knows how to pass those projects or sell those projects and get those acquired by larger companies to create shareholder wealth. For example, Katya Vitova, she's joined our board of directors very recently. She was the head of M&A for Royal Dutch Shell in London, as well as Citibank. So our team is very well positioned to continue creating shareholder wealth. I can leave it there for questions now. I think that's a good summary.
Okay. Yeah, Kevin, good job, man. This sounds exciting. I'm really glad to hear that you're going to have a pilot plant up and running by the end of the year. I think that is key to show that these things really work. Somebody posted a question even before you started talking, so I'll read that one first. It's from Shane. Why do you think you can pump 5,000 cubic meters a day? Are you not worried about skin and near wellbore damage? This could drastically increase the number of wells and capital costs if this number decreases.
We actually think we can pump more than 5,000 cubes per well.
Okay.
The formation is the advantage we have is the fact that there's 550 well bores in the formation, and there's a lot of production data and there's a lot of data to back that up, and just the current porosity and permeability and the transmissivity of the formation allows for that.
Yeah, that seems like a lot of water.
It's a lot of water.
How much water, like when you go to a commercial sized plant, how much water is running through the plant?
So to get to this level of production of 31,350 tons.
Yeah.
We're looking at 250,000 cubes per day from a 50 well production network.
Wow.
A lot of water.
So the process to extract the
lithium, it's not coming into one giant vat, though. It's not coming into one huge pond or anything. It's coming through these different modules.
Oh, okay.
So it's sized accordingly.
Yeah, but so stripping the lithium out of the water just happens real fast, right?
It happens very fast. Yeah. So it goes into these DLE contactors. It mixes with it goes through the ion exchange media, and it's an ion exchange, so it happens very rapidly.
Okay.
And so you want to put it through a couple cycles, and then you don't want the water at surface for very long because it's a lot of water. You want to get that water up and down as quickly as possible.
Yeah. So is there any chance, somebody posted, what will happen with the water produced? And I guess what is the break-even price for the whole project? But just focus on the water. So your plan is to just re-inject all the water after you strip the lithium?
Exactly. Yeah.
But is there any chance that water could be does it get clean enough that it could be used for irrigation or anything?
Well, the water will still be briny. It'll still be briny because we're not removing all the salts from it, right? But that said, we've been approached by certain companies because we've removed it. We've kind of cleaned the brine,
right?
And so a lot of oil companies use fresh water for fracking and for certain processes.
Right.
But this water would be perfect for their frack, so we could actually offset freshwater usage from that.
Yeah,
So
I mean a lot of water is used in fracking, and a lot of times, the upstream oil and gas companies can't get enough water for their completion programs.
Yeah, we can certainly use this water for that purpose.
Okay, that's cool. Let's see. Okay, will we need to wait for PEAs to be completed on the SAC properties before any news regarding potential partnerships or sales?
Oh, for Saskatchewan?
Yeah, for the SAC, because I think you indicated you might work those up and then sell them.
No, I don't think we'll work them up too much. I think we'd rather keep LithiumBank non-dilutive and have NewCo or some arrangement raise the capital and develop those projects. Those projects have huge potential. We're just not seeing the valuation in our company.
Yeah, I'm just trying to get in my own mind what the business model is. So do you think that these, like Boardwalk, would be spun off into a separate company and operated there, or do you bring in a operating partner or something?
Yeah, there's a lot of options to do that. How it looks today, I can't tell you. But there's certainly options, and each company we talk to sort of has a different idea. So whatever works best for shareholders and best for the company, we'll pursue.
Okay, so you guys could just be, coming up with new prospects. So it might be like a prospect generator and spin these things off into.
Yeah, that's what's happening with Saskatchewan. We feel the best approach is to spin them off.
Okay, then what do you keep some kind of an override in it, or just
Yeah,
an
we'd get
outright?
50, we'd maintain 50% ownership at the deal. And
Okay.
get a bit of cash out of the deal as well, non-dilutive cash, and keep the upside. I think shareholders would get a free share in it. We keep 50% of the new co.
Yeah.
And it's, you keep the upside without being dilutive and watch, and we can help them as well along with our expertise that we've gained.
Yeah. Well, so do you see LithiumBank being the physical operator of, let's say, Boardwalk? Are they the ones that will you have to get a lot of employees in the field and
No, we don't expect to be the operators of a producing lithium plant. We think that there's larger companies more suited to this, whether they're oil companies or a combination of a battery company, an oil company, or a mining company.
Okay.
This is a $2 billion capex. We don't have it. We're where we are at this stage. We're developing these assets and de-risking these assets to a point where they need to get developed, but they need to get developed with larger partners.
Yeah. Now, who talk about Hatch? What is Hatch? Who are they, and what's your relationship with them?
Well, we engaged Hatch, about a year and a half ago. They're a global engineering firm, and they're huge. I mean, they're all over. They do massive projects and they build massive projects, right? And they've amassed a hydrometallurgical team specifically for critical minerals, and lithium being the main one that they focus on. So, we use them for our PEA as well because, they're the firm that people go to sort of pick apart other people's PEAs. So if you go to a firm and like, okay, we want to see if this PEA is any good, let's have Hatch look at it. So, you start with Hatch. It's kind of hard to pick it apart when they're the ones signing off on it. So, obviously they're a lot more conservative and they have real world building experience. So they implement those into their models and financial models and say, well, you're not gonna scale up as fast as you think you are. So let's be a bit conservative there. So a lot of these numbers use real world project building experience. And the other side is their hydrometry. Like I said, like their technical side for developing the DLE processing stream is really, world class.
So do you see LithiumBank operating the pilot project, and then once you get somebody interested in, hey, this is going to work, then you kind of become a non-operating partner in the main project?
Yeah, so the
Okay.
technology company would have overarching management of the pilot plant. I mean, they would be their technology. It's proprietary to them.
Okay.
Whatever deal we make with them, they'll have the interest to want this thing to work as well. So they'll be the one managing how the pilot is run. We'll be a part of that, of course, and it'll be under our roof. So we'll probably hire some engineers and help make sure that everything runs smoothly.
Yeah. Go back to that slide where it's like steps up to what you have to get to.
Let's see.
Where the one where Standard Lithium's there at the top. And yeah. So how long do you to get to where Standard Lithium is? You think you're just a year and a half away from that?
Yeah. So if we pilot and everything goes, as according to plan, we should be piloting by the end of this year. They're at commercial demonstration plan, right? So we're a year out past pilot from that.
Mm-hmm.
But we see us closing that gap on E3 by the end of this year for sure, with piloting and drilling. And then from that point on, like our pilot will be quite large. Like it'll be sizable. It's been used in feasibility studies before, and for other minerals. Like I said, the ion exchange is used in cobalt and uranium, and it's a water softener. So some of these plants have already been used for other projects. Like we know they work.
Okay. Let's see. This is probably not your call, but at what point can you see potential NASDAQ listing to get more institutional? Yeah, who knows, right? Who knows, right?
I don't know.
I think you need to be further up that food chain there before you go there.
Yeah,
but I will tell you that we have made quite a bit of money off Canadians that do when they get the NASDAQ listing, sometime we'll get a 50 to 100% bump in the stock price. So it does help when you start getting, because there's a lot of large investors in the US, they will not invest in these pink sheet companies and stuff like that. So anyway, is what it is. Down the road, is there any thoughts for Park Place and Boardwalk to share facilities halfway between each other to decrease the cost?
Yeah, absolutely. Right. Like, so Boardwalk is a standalone. We'll probably do Park Place as a standalone, just so we have a grasp of the economics of both projects. Park Place there's a new high efficiency gas turbine plant in Edson, which is right on the border of that Park Place asset, and it's like a 300 megawatt plant. Wow. So there's a lot of synergies to this for sure. I mean, 50 kilometers apart, you can truck your concentrate 50 kilometers very easily. Yeah. And have hubs, have large scale hubs to one back end facility. So your battery grade facility, right? So once you've reduced the volume of your brine to the high purity concentrate, you can move that a greater distance very economically.
Okay. What's the terrain like where this is?
Oh, that's a good question. Thank you. I forgot to mention that. I mean, we're sitting in Alberta. It's not in the Rockies, not in the beautiful Rockies. It's in the flats. It's very flat, about 700 meters elevation. It's not dealing with 4,000 meters elevation like you have in the Atacama. It's canola fields, it's oil and gas country. So it's very easy to work with. There's 4-lane divided highways running through. There's a lot of gas pipelines. There's a lot of electrical lines. It's a great place to work.
And because you're near where the big oil sands projects are, right?
No, we're much further south than that. That's up
further south. Okay.
Yeah, that's up in Fort McMurray. So we're closer. We're more central and central, I guess.
Okay, so the product that you produce, the lithium, what is the form of that product? Is it a powder? What is it?
Yeah, it'd be like a white powder.
Okay.
We package it up in buckets or 1-ton bags or whatever.
Oh, okay. So it's trucked out.
Yeah. So our in the model, it's trucked to somewhere in the car belt in middle America, right? Somewhere in Detroit or something. So
so the trucks take it to trains or something, and somehow they get it to the battery manufacturer.
Take it to Edmonton, and then from Edmonton it can go anywhere.
Okay, cool. That's good to know. Let's see some of the questions I had early. What's the lithium hydroxide selling for today? I looked at lithium and it was $42,000 a ton, but I'm not sure if that was lithium hydroxide.
Yeah, I think that's the lithium hydroxide price. The carbonate and the hydroxide price are fairly close. They stay fairly close, but yeah, that's the latest price I have as well as 42,000 a ton for LHM.
But in your PEA, you're using what, 25,000?
26,000, yeah.
26,000. So yeah, if it stays over 40,000, the economics go way up, right?
Oh, highly leveraged to the upside.
Yeah, highly leveraged upside. And I'm telling you, we watch or we follow a company, New Vermont Graphite. They produce graphite, and he thinks that all these elements used in rechargeable batteries, demand's going to go up. We need to develop these products, these minerals within North America. Yeah. And they're going to have like people begging for their offtake, I think. So anyway, I think you'll be the same. How does the relationship, the field operator in LithiumBank? So you don't see LithiumBank having a whole bunch of field operations and stuff like that. Is it like a contract operator? They're going to be putting in the money to develop the whole thing, and then you'll have a interest in the project, correct?
Yeah, you mean in a commercial production scenario?
Yeah, in a commercial production scenario, you're not running these big. I mean, because it seems like to me, Boardwalk's going to turn into a very large mining operation, right? Yeah,
no, we're not going to operate this. This is going to be operated by a much larger partner. Whether it's purchased outright or we maintain an interest, that's to be determined. But this will be operated by a much larger partner.
Okay, because I was wondering about how does this explode labor fork, and is there good labor around there? There's a lot of people working the oil field and stuff, right?
Well, there's certainly. I mean, Alberta is like Texas. It's an oil and gas place. Everyone's skills are, of course, easily transferable. I mean, you're drilling wells; they're the same for oil and gas. So there's a lot of skilled labor in the area.
So this is much, much different than open pit mining, right? This is more like just a big oil field that's producing a whole bunch of fluids.
It's exactly. It's like it's closer to a water cleaning exercise. It's
A big
we
water
don't like
flood.
to call it mining because it's not really mining. It's mineral extraction. It's
Yeah.
a water moving operation.
Okay. All right. It's kind of clearing this stuff up for me personally. And I do invest in these myself. So I do tell you that. Let's see. Any thoughts regarding Chile mandating that all new lithium recovery projects use a DLE methodology? And if this is a further affirmation of your business? That's interesting.
Yes, thanks for that question. I think that I think that does further affirm and de-risk the DLE process. I mean, if you have the country of Chile saying we want everyone to use DLE because it's a more efficient, it's more environmentally friendly. I mean, that sort of is a huge indication that the DLE is work.
Oh, I tell you, since I've been following Standard Lithium, they've been attacked many times by these guys that say DLE is not going to work. This is all a bunch of baloney. It's a Ponzi scheme kind of stuff. So when this starts getting used in several different oil fields and it works, that changes everything for you. E3, Standard Lithium, everybody is going to get a lot closer look.
Oh yeah. And it's companies that are positioned to implement that DLE quickly, I think will be the best. The best will float the highest from that tide that rises. Yeah,
that's good. Well, anyway, I think a very good presentation. I know I learned a lot today, and our guys will be following it. I've worked with Scott Koich over there at Briscoe Capital, and I'll eventually be assigning one of our MBAs to work up a profile on the company, and we'll be following it very closely. Anyway, if I know there's some non-members on here, if you're not a member of Energy Perspectives Group, this is what we do. We try to find very promising small caps, especially that the Wall Street gang isn't quite aware of yet. And I get them, draw them to attention of our members. We did have about 650 members before COVID. Now we're down to like 400 again, but we've been picking up a lot of members, and especially in Europe and Asia. It's amazing. Just in the last year, I would say we've tripled our European Asian members. So what's happening between Russia and Ukraine and how much the wind and solar stuff has kind of not worked for them. You have a lot more investors or money managers looking back at the oil and gas industry, and probably stuff like this too, mining industry and things. So anyway, it's good exposure for people like Boardwalk. Anyway, Kevin, thank you very much. And we'll go ahead and end it there. We have recorded this. We'll be sending out the recording link to all of our members this afternoon. And that's where you'll see probably hundreds of people watch this replay.
Great. Thanks a lot, Dan.
All right. Thank you.